Alright, welcome to Friday's review, Friday 16th January 2026. Yesterday actually closed lower, traded up to previous high and closed so low, even below half of previous week's range and below the mean threshold of this down close candle, which was the bullish order block. We're below Tuesday's opening price on a Friday. So look at the range. This is the high of the week, low of the week that I expect. I expect it to stay in place. I do not really see a TGIF because I've traded off the high. We're definitely not trading at a high right now. So we've traded off the low and we're definitely not trading at a high right now. So TGIF is out the window. But I'm bearish considering we're below Tuesday's midnight open, considering yesterday closed so low, such weakness, and the week's range is rejecting a high time frame PDRA. So despite my previous view on liquidity being 26,123.75, the week is not delivering higher prices, so I'm bearish on the week at this point in time. Now I'm willing to see intraday sessions and how they trade, look at where the buy stops are, look at where the sell stops are, and frame a short setup for liquidity, because I can see New York PM lows here, I can see New York PM lows here on regular trading hours. Going to the session at the open, I'm taking this screenshot at 35 minutes past 9 a.m. New York Standard Time, and at this point we're trading at the high of opening range gap. So we gap up and mean threshold is lower, so there's a 70% chance of getting that, of seeing price trade down to mean threshold to the midway of the opening range gap. So the middle of that gap, mid gap, can be traded to during the opening range, and there's a 70% chance of that happening. And if that happens, why not us have gap closure since the daily chart looks like this? And why not us take New York PM lows? That's the mentality going to the session. And let's drop down to the 15-minute time frame to see how it played out. There are gems right here, bruh. Lock in. This is the 15-minute time frame. We see price trade above buy side liquidity here. Also, it trades into this daily volume imbalance, so it's rejecting from a daily high time frame PDRA, and we see Wednesday's trading sweep Tuesday's low. At the same time, it attacks a pool of sell side liquidity pools here. That's an old low. At this point, major sell side liquidity is engaged. Smart money is buying the sell stops. It gets net long, accumulating longs, and where are we going to offload these longs? They'll look for people who would be counterparty at the higher price. So the algorithm spools up. We reprice up to these highs, smooth relatively equal highs, New York AM highs, price offloading those buys. It gets net short above here, and we're distributing lower. People who are looking to buy on a breakout, they have buy stops here. Price trades there, tags those buy stops, offloads, and now gets net short because someone is counterparty to this longing on breakout artists, and anybody who was short with a protective buy stop here, they have been taken out. Price declines. This is during the New York PM session on a certain Thursday before this Friday trading, which we are talking about. So we're looking at the liquidity from the week's range. So this move lower was to trade down into a pool of sell stops for short covering. Someone is net short at these highs and wants to see short covering below an old low, relatively equal lows where there are sell stops. It trades down, but notice it did not engage the sell stops here. Price stops dead, and we see a spool lower. It's a slow grind, very slow grind, retracing higher. This alone should indicate that we are not reversing. This is simply a retracement. Look at the displacement lower. This low resistance liquidity run low. Look at this move higher, more difficult. Price is struggling to get up there, and eventually it gets to a 15-minute time frame bearish mitigation block. Also, we're trading at Tuesday's midnight opening price. At this same level on the 4-hour time frame, you see this is a rejection block. On the 4-hour time frame, we see a 4-hour rejection block. Price nicks into that. There's short-term high here, buy side liquidity. We have swept it, and we see a massive displacement for short covering below relatively equal lows. because when price was moving up higher with this slow grind, retail traders were buying this low as support. They saw this as double bottom. They bought down here, and as it moved higher, they had a protective stop below here. What is a protective stop or a buy position? To have a protection and buy position, your stop loss is going to be a sell stop. So the sell stops below here build a larger pool of sell side liquidity. Price after the open massively declines, sweeping that sell side liquidity for short covering. Alright, so the previous slide was retrospective, and now we are back to a real-time slide. This slide is before the move lower on Friday. So going to the session, as we spoke of on the daily time frame, I'm looking for lower prices. I want to see price trade lower into this open range gap. I want to see mid gap. I want to see the low of open range gap, which is the full gap closure. I want to see this sell side liquidity pulse, because I'm looking for short covering for smart money longs. Rather, for smart money shorts, they have to do short covering at a pool of sell side liquidity. And after this slow grind higher, there's sell side liquidity right here. I see the drawn liquidity for this session to be this 4-hour fair value gap. It's the inefficiency in the sell side. So this inefficiency is in the discount part of this range, and I see that as a proper draw on liquidity for Friday. However, Friday has its own function. It will surprise you to know that Friday could be a massive trend day, even higher as the week stands. So I have that factored in, and I know that Friday can move into a trend day and move higher if the resistance is low liquidity, resistance ground conditions. But looking at the way London traded and London launched, does not really look to be the case. And now, considering that we are trading at the mean threshold of a bearish mitigation block, we're also trading below Tuesday's midnight open, which is a 4-hour rejection block, and we have clear draws. This is a sweet low hanging fruit on London session lows, nice Asian session low, New York PM low on the regular trading hours, and this strong liquidity below here. Yeah, I'm thinking sell side is more probable than buy side. Price is currently trading above midnight open and 8:30 open. We are in a premium, and our premium prices, given that on the higher time frame I'm even bearish, I'm looking for lower prices. So I'm shorting at a premium, and that's very alright. I see the rejection of that CB, and my entry is as price trades higher into it. I'm looking for mid gap of open range gap, and I'm looking to see price trade way down into full gap closure and a trade below New York PM lows on regular trading hours. So at this point in time, I'm short 4 contracts, 26 handle stop. I'm looking to see price trade to the open range gap, mid gap right now, and I'm noting low hanging fruit objective at pre-market lows. So trading below that 50% of implied gain range is hit right there, open range gap midpoint hit right there. I take 2 contracts off and I remove risk on the trade. Price displaces lower, is about to hit the lower quadrant of this gap up, rather than a gap up on the opening range gap. So it's a gap up, we're about to hit the lower quadrant, and hit there, we hit it. Price has traded down into the lower quadrant as well of my implied daily range, and I want to see price move lower. Since it just took Asian stops, I took 1 contract off. 1 contract was taken off at Asian lows. Price got to the Ripper, started retracing. I'm being patient, trying to hold the last contract for my full objective. And as I see this retracements up, I'm counting arrays. ICT teaches that after 3 PD arrays are disrespected, your ass is next, or your stop loss is next, you know what I'm saying? So I want to see price stay below this current array I'm about to draw. I'm about to draw a sell side imbalance, buy side inefficiency, and I want to see price stay below that level at all costs. Invalidating it is going to mean this trade is not good, and I'm going to get out of that last contract. So see the bodies of the candle respecting the CB. I want to see that respect stay in price. I want to see price move lower, displace towards the New York PM lows. And at this point, I'm aggressive. I'm aggressive in taking profits. I'm up more than 3 hours on the trade. I've trade stops down to that CB. Any breach up above it is going to mean I'm out of the trade. It means I'm wrong. So at this point in time, after seeing this displacement close to the low, I take the last portion off, and I'm willing to study to see how price trades down to my objective, which is New York PM lows, and probably the drawn liquidity, which is going to be the 4-hour BC. Very good. Now that the execution is out of the way, let's look at this in review. Pre-market highs are taken here. Pre-market lows are low hanging fruit below. So finding this setup right here, this is a low hanging fruit objective. New York ATM model played out beautifully. Next, we are on 8:30 opening price, mean opening price. Those are right here. Shorting above that, targeting lower prices. Is shorting in the premium, looking for discount, sell side liquidity. Beautiful, in line with Chairman's model. Model 2022 is seen because we have a short-term high here. Price rallies, sweeps the liquidity above that. We see a displacement lower, 5-minute market structure shift. After this market structure shift, we see a rally into a bearish fair value gap. This bearish fair value gap is actually Friday's Reaper. Friday's Reaper is another name for a first presented fair value gap after 9:30 open. So price rejects that level, and we see a beautiful displacement lower, retrace, and we finally attacked New York PM lows. Here we see the high of the 4-hour buy side balances and efficiency was traded to. It retraced higher into these consecutive up close candles, and we see a run lower to old new week opening gap. It's from here we'll find support and began to draw back into the range. We're drawing back into opening range gap lower quadrant, and price is held at bay onto the close. So the expectations played out perfectly. We saw mid gap traded to, so the 70% chance of mid gap of the open range gap getting traded into during the opening range was met. This is open range 50% right here. We saw get trade within, that's before 10 o'clock. Between 9 o'clock, 9:30 and 10 o'clock, we see that level hit. Full gap closure delivered. New York PM lows delivered, and the market finally found support at the old new week opening gap. Now, after finding support at the old new week opening gap, price rallies, hitting again opening range gap lower quadrant and staying within that range. If you even look at the launch high and launch low, we stay within launch high and launch low and consolidate right into the close. Market on close macro does not do much, and that's how the day ended. If you had value from this presentation, like it, subscribe so we know we're sending out value, and we'll see you in the next video. Thank you. Stay strong.